Hello, today is January 9th, 2016. We're going to change the order around a little bit today and look at the MEJT software chart first and then come and make our prediction last. On Friday, there was an ultimate sell signal given by MEJT in the afternoon, but it also said that prices would trade past this blue line too. Ultimate signals ultimately print, but it doesn't have to be the next move. We promptly traded over that line. The system and the software identified the move as a false move, hence the blue Fs, and then the target from the ultimate signal printed, and south we went. No new MEJT signals. Well, let's talk about my calls on Friday. This is a case of be careful what you wish for, you might get it. I had three predictions. One was we'd have a target of 1954.85 that printed and there was resistance over it. I said I would like to see prices a little bit lower than these lows. We actually got that too. And the last prediction was that this was going to be the day of the low, because we had this newspaper headline that said stocks were dropping, and usually that comes within a day of the low. So by Monday we're going to find out if that prediction works. We have some pros and cons to look at. We did get bar 13 of the combo and sequential buy signal on the 78-minute chart. We did have the combo buy signal print right at the end in alignment with the sequential. Note that the stop loss of the sequential was pretty close. The rule on these stop losses is that they're loose. That's a bit more than I would like to see. The real problem is we have these buy signals on the 30-minute chart. Here's the stop loss, and we have violated it. DeMark has something he calls a critical qualifier, meaning we have to go past this by at least a tick, and if we gap up Monday, this violation does not count. We have a number of other failures too. I have this line here, prices should return to it at some time. The line is sloping down, so at some point it'll be zero, and that one's obligated to come true. But this is one of my rules, that prices should return to this line at some time. That's getting further and further away, and that one might not work. We have some Fibonacci support at the low. That might hold. But if not, I have a price target of 1839 plus. That comes from two things. One is there's a price target generated from this TD line break discussed in DeMark's books. And back in August here we had a futures print of 1831, which is equivalent to the same price in cash. This target price isn't a stop and reverse level, but when you have two totally different methodologies targeting the same price, it tends to hold. As we've said, we really have to gap up Monday, or else we're going to get a failure of a DeMark buy signal. And when these things fail, they fail in a large way. And when they fail on one time frame, they tend to fail on all the other ones too. That's not the only problem. This trend line retracement has not worked. That 30-minute DeMark buy signal looks like it's going to violate its stop. New Year's Eve, we had a wall into the close with a higher MEJT target. I found that to be a very reliable buy signal, and that one failed in spades. The principle of the newspaper headline indicator is that it indicates a panic sell-off. You want to see a huge volume sell-off when the market opens the day after the indicator, then recover all day long. It indicates that the public has thrown in the towel. We got just the opposite. We got the market gapping up Friday, indicating that the public had not capitulated, and the volume actually dropped. For all these reasons, I think Monday could be trouble. We have extensive oversold buy signals, but let's not forget that after a long decline, oversold signals are positive, but when it's early in a decline, they can be very negative. So the call for Monday is we either gap up smartly, in which case we could have a strong rally, or what I think is the more likely occurrence is that we drop. Could be a large drop, and we could see 1839 plus pretty soon. It's possible to make a few price projections. I've seen a few people say that this bear market could last months. I think it's much longer than that. Here's your monthly chart. Here's your bar 13, but you don't get the actual sell till you get a price flip, which is here. If you take out the close of number 8 within 3 bars, it tends to be a very strong signal. And within 2 bars, we took that out, so we're going to get a major league drop. If you look at all these TDST lines, you'll see with the Fibonacci grid, this is at 0. I think that's 14.6. I think that one's 50. This is a 78.6, and I think this is a 61.8. Let me see if I can see what the price is on that. I think it was 1650 if I remember. Yeah, this is around 1650, and that's my next target. If you look at a weekly chart, if that's wave 1 down, and you set that at 61.8%, and you set 100%, here's your 38.2 right at the close on Friday. Makes it possible we could stop here. But if you go all the way down to 100%, you get about 1648, practically the same price that we came up with on the monthly chart. And there's also a TDST line at the weekly chart around 1647. So after 1839, we're looking around 1647, 1650. By the time this is through, I think we'll be in the 900s, and the bear market's going to last years. So Monday's call is that we either gap up smartly, in which case we can have a strong recovery, or anything less, we have a drop and we see 1839 plus pretty soon, where some support should be seen. And that is today's call.